Hey folks, Dan Frio here with your closing bell for August 5th, 2025. So today I'm going to try to explain with the little economic news that we have, what happened to the markets and the whys behind it, folks. So what we're going to talk about in today's video is this. We're going to talk about what's causing the stock market to retract a little bit today, retracting from all-time highs though. We saw the S&P close a little bit lower today based on tariff fears, more tariff fears out there, and poor economic data. That was the servicing index we'll get to in a second. We're going to show you how that's affecting the markets, but AMD just came out after the bell with poor or less than stellar earnings reports. We're going to go over that with our earnings reports right through here, and then we're also going to talk economic calendar, what's in the agenda for tomorrow, Thursday, Friday, that might be affecting these things and the whys behind it, folks. So without further ado, let's get to it. So mortgage rates popped a little bit today. I thought we might hit the 6.6 handle as the day progressed. Throughout the day, we saw mortgage rates recover a little bit, which actually helped a little bit. So mortgage rates only ticked up 0.01% today, which is nothing really to write home about. So let's get over to the markets. Right now, here's what we have. We have President Trump warning or threatening once again on more and more tariffs. So we're going to see how this smokescreen blows through the economy. We can see basically every 24 hours it turns. So that's why I'm updating you guys twice a day to let you guys know what in the heck's going on that will be affecting things. So right now there is some concerns over additional tariffs there, but we do have some a little bit less than stellar economic news out. And also AMD came out this morning or this after the close, and they are showing weaker than expected earnings. So that might be a catalyst to start drawing down in the equity markets. And as people pull out of the equity markets, will they move over to bonds? Well, let's check the economic calendar, see what the rest of the week looks like in regards to the economic calendar that might be affecting things. So let's get to that. Tuesday, here's what we had so far today, and here's what basically caused the markets to turn around just a little bit, was the servicing PMI right through here. This number was 53 previously. It was supposed to come in at 55. It came in right as expected. So they're saying, okay, servicing is picking up a little bit, but this is now another sign of stagflation, and that's what headlines are saying. But folks, don't worry about that right now. I don't think we're in a stagflation period of our economy right now. Once we get through tariffs and a lot of these uncertainties, I think the markets are going to stabilize, and they're starting to stabilize already, and that's why we're seeing rates about 6.5% right now in the 30-year. So that was all that really transpired today until, look at these. I wanted to show you two pieces of the puzzle that came out from noon to the closing bell, right through here. Atlanta Fed's GDP. Previously, they thought it would come in at 2.1, or it came in at 2.1. They expected it to stay there at 2.1. It actually came in higher at 2.5. Now, here's another thing that really is helping the market. Look at this 3-year Treasury note. So what happens is with the bond market, they sell Treasuries most of the week, and we focus in on the rates kind of behind the scenes to see how much the rate had to move to get rid of the debt. Well, if you look at the last time, it took a rate of almost 3.9% to get rid of this debt. Now it's 3.66. That's a pretty good move when you're talking interest rates, okay? So that's also a catalyst that's driving down yields. This is helping the short end of the maturities. Thus, it'll start bringing down the back end of the maturities as well. So confused about all this, these are things that are helping out the markets right now. And here's what I'm showing you. Right through here, here's what happened in the bond market today. So if you're really concerned on what's going on with interest rates, mortgage rates specifically, we follow the mortgage bond right here. You don't follow anything else because there's really nothing else to follow. A lot of people follow the 10-year Treasury, and yeah, it does have correlation with what's going on with mortgage rates, but if you can get to the MBS chart, this is the thing to watch. So you're seeing right through here, it just went up. It was up 0.02 right when I started the broadcast. Now we're down 0.01. The market's just about ready to close, and here's where it's settling in. The nice thing about today is we filled in the gap. So if you watch this morning's video, my concern was we opened up right here. So again, when you're following the markets, here's what this path is telling us, or here's what this chart is telling us. When mortgage bonds are up, the charts are going up. That means rates are coming down. There's a yin-yang effect behind all these. Prices up, rates down, yields down. If prices go down, rates go up. Okay, so look at this. Every time you see a gap right through here, and this is what we call a gap. This is where we closed yesterday and we opened today. This is bad. Remember, when this goes down, rates go up. We started the day on a bad note, and the day recovered all the way through the close until just about now. So right now, this is a good trend. We filled the gap right through here, and we continue to move up. Now we're teetering on this. So now the line that we're focusing in on is right through here, 100.25. That's the number we're going to focus in on. If you look at just not too long ago, we were at 99.25 last week at this time. So we're 100 basis points from where we were last week. That's about 0.25% or more off on rates. So it's a fantastic move that we saw, and the rates are continuing to ease a little bit further going into this. So now the thing we're going to look at is we've got all the data that the Federal Reserve monitors, the jobs report, the PCE on inflation, everything else. Now what we're focusing in on, like I was saying, is we have to pay attention what tariffs are doing, how inflationary is that, and then we're going to take a look every day at earnings reports. What companies are coming out with their earnings and what do they look like? Are they kind of starting to crater? Because if they start to crater, folks, that's going to be bad for the economy. Okay, so we want to make sure that corporations are profitable, the markets are okay. It would help us, actually, if the markets really start tanking and corporate profits start missing. That'd be a whole different element. We don't want to see that. We want to see the economy just slowing down at a nice pace so we don't have stagflation. Inflation doesn't tick up its ugly head again, but corporations are still making profits, able to hire people, and the economy can smoothly sail along. So let's look at today's corporate profits or their earnings reports. So on Tuesday the 5th, we had a whole slew of companies coming in with their earnings before and after the bell. Here's what the numbers look like. So right through here, out of 18, I think it's 1, 2, 3, 4, 5, 6, out of 18 companies that posted so far today, we have 1, 2, 3 that missed. We had 3 that not yet posted, and all the other ones in green, they actually exceeded their earnings calls that we see on revenue. I'm sorry, that's the revenue. And then you can go up through here and also look at the earnings per share. And you can also see the same thing. 3 out of, and all these reported, so we have 3 out of 18 companies reported lower sales than was expected. All the other companies were positive. So that's a good reaction on what's going on in the economy, the overall broad economy when it talks about corporations. So to conclude, we're going to watch what the economic calendar is going to give us tomorrow. So let's go over what that is. Really nothing there, folks. We got the FOMC daily speaking, not going to really learn anything there. The 10-year auction is going to tell us what happened with notes, the yields on that. Really nothing until Thursday. Now, Thursdays, these numbers, I think people are just going to be antsy as all get out to see what these numbers come in. These are now going to be the initial jobless claims and continued claims. Let's see how these get adjusted and see if this is going to be a huge uproar like the jobs report we saw on Friday. Hopefully not. But it was a good day for mortgage rates. So let's get back to it to conclude what we have for today. Mortgage rates basically flat as a pancake right now. It recovered nicely throughout the day. Here's what we have on a 2-day chart. So we filled in the gap here and then exceeded a little bit more. So we're basically filled the gap and we're stagnant right now. So that's what the market's telling us. No economic news out tomorrow. Unless there's any tariff news really coming out, I don't see the markets really having any effects, kind of similar to like it was today. I love days where there's basically nothing going on. Makes our jobs a heck of a lot easier. So basically I'm thinking until we get the jobs report on Thursday, nothing's really going to happen with mortgage rates, but stay tuned every day so I can at least advise you kind of what's going on. Is there a tweet? Is there anything or did somebody sneeze that made the whole world collapse? That's what I'm going to focus in on here every day, folks. So that's what we have for today. So I don't expect rates to really move at all today. We got the 30-year fixed rate now in the 6.5% range, right where I expected us to be in Q3 of this year, and we're there, folks. So pretty good call there. If you want to reach out to us for some assistance, if you're looking to buy or refinance, I'll give you what I do for a living, folks. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer. I'd love to be able to work with you. If you're out there looking to buy or refinance, you should be able to because I'm licensed in all 50 states as well as Puerto Rico. Our slogan here, we changed it just a little bit. It's one application, one credit pool. We're going to compare your loan to up to 33 different lenders. How? Why? Well, we're going to do this for you guys because when you're going out there getting a quote, we get them every day. People are like, Dan, I already got 3 or 4 quotes. Here's the best one I have. What can you do? That's what we love. Okay, I want to be your first and only place, hopefully, but if you're out there shopping, reach out to us. We'd love to help you. Just go to therateupdate.com, upload your loan estimate right into here. Make sure it's the best one you got, and I'm going to do a personalized video right back to you to let you know, can we save you on the fees? Can we save you on rates? Or maybe we can save you on both, and if we can, I hope you move over to us. If we can't, I'll be the first one to say, God bless you, keep what you got. But if you're also buying a house right now, check out the $7,000 or up to $7,000 grant we have for homebuyers. So this is is income-based, so check out how this works. And if you need any assistance with any of this, or you just want to get our assistance with putting my 35 years of experience to work for you and getting comparisons with up to 33 different lenders, go to therateupdate.com. You can give us a call right there up the corner. You can ask me a question by asking Dan right there, or you can put in your application right through here. So that's it for today, folks. Thanks for watching. God bless. And if you haven't subscribed yet, please do. I'm trying to get to 40,000 subscribers as quick as we can, and only you can help me get there. So thanks for watching, folks. Hope you had a great day. Hope you learned something today. Can't wait to see you back here tomorrow morning at the opening bell. See you then, folks. Bye-bye.